How's this thing going to play out here? It feels like Paramount's got to come in with a higher bid at some point.
Yeah, it's an interesting development. So Warner essentially rejecting Paramount's barely improved offer, same $30 a share offer, a few extra guarantees.
Yeah.
If they want something to move in this discussion, I think it's going to have to move up to $34, $35 a share. We're in an interesting situation here where it's hard to tell which of these bids is really the higher value one, because of course they're going after different assets. Netflix wants just the studio and streaming assets. Paramount wants everything. So understandable in that uncertainty that Warner's leaning towards Netflix, the much larger company. What I think's interesting about this is not so much the takeover commentary, but really what it says about the reset that's happening in the TV space.
Yep.
Distribution shifting, monetization under pressure. So all this consolidation is a symptom of that pressure, not the cause of it.
What is the strategic reason that Paramount hasn't raised its offer already? I mean, when I saw that Warner Brothers was expected to reject the bid, I immediately looked to NINSS, right? No duh, they're going to reject, because they haven't offered any more money. Just because you say Ellison's good for it and the breakup fee is a little bit higher, that's not going to move the needle. Why don't they say, okay, it's $33 a share?
Well, I think there's plenty of time here. I looked at betting markets the other day. There's a decent shot, according to them, that this drags on into 2027. So I think there's 5 or 10 new developments that we're going to get over the coming days and months, and plenty of time to potentially raise the offer.
By the way, it's interesting you bring up betting markets, and more, that's an indicator that people care about. And I wonder if it's because, does David Zaslav put down a bet? Does Larry Ellison put down a bet? Do people in the know, you think, play in these betting markets?
Well, I don't know if people in the know are playing in the betting markets, but certainly...
The thing is, Luke, you know more than everybody else about this stuff, right? So when you're looking at the betting markets, like, why do you care what these chumps are putting down on poly markets?
It's a question of how deep that market is.
Yeah.
Like, how representative are those betting markets?
Yeah, well, look, there's lots of moving parts in this takeover battle, regulatory issues, political connections. So, again, I don't think the story's over there.
People in the Trump administration would be playing on poly markets?
Crazy to think so.
So, Luke, how about this?
I'm shocked to hear that there's gambling going on in this place.
Looking at this deal, it feels like it's a nice to have for Netflix, but it's kind of a must have for Paramount, because if Paramount doesn't get this deal, I don't know what they do. So how do you think about that? I mean, if I'm Paramount, I feel like I really got to stretch to get this deal.
Part of the problem in the whole TV space is really the economics don't work anymore. So we're at something we call the pay TV singularity. Right now in 4Q25 is when fewer than half of the households in the US have a pay TV subscription. That's down from nearly 90% in 2010. And the economics just don't work anymore. Consumers want video more than they ever have. They spend more on video than they ever have. They're just doing it in a different way.
Yep.
And a lot of the gains aren't going to the streaming platforms of a Paramount. They're going to a Netflix or an Amazon or an Apple.
Do consumers care about, I go to the movies all the time, but I'm old, right? And that's because I want to do something with my wife where I don't have to talk to her. Do consumers care about going to the theater? Because if Netflix wins, the worry is that we're going to see the end of the big screen business.
I mean, theater box office receipts still haven't really recovered since COVID. We haven't seen a new high yet, even though every year we expect, everyone forecasts a new high. I think part of it is that people underestimate how engaged consumers are with streaming platforms. Every time we see a price increase or a password crackdown, everyone has a discussion about, is this too much? Is this where consumers say it's too expensive? But consumers aren't trying to save money by cutting their cable subscription. They're just moving that money over. And so for a Netflix HBO or another combination, $30, $40, $50 streaming bundles, there's plenty of runway for price increases.
What's amazing here is the value being ascribed by various players in the marketplace for the cable networks business of Warner Brothers Discovery. Those businesses used to trade at 10 and 12 times EBITDA. They're being valued today around 3 to 4 times EBITDA.
3 to 4
times EBITDA.
Is that the Netflix valuation or the Paramount valuation?
Again,
because the problem is those are pretty far apart, aren't they?
Somewhere in between. Bloomberg Intelligence Geetha values them at about $4 per share. That's about 4.5, 5 times EBITDA. Less than half of what they were, 10 years ago.
And part of the problem is the TV ad business is just in permanent structural decline. So it's this $70 billion slowly melting iceberg of value that is not recovering as much as broadcasters want to brag about their streaming ad growth. It's just cannibalizing the linear dollars. It's not growing the pie.
By the way, can you weigh in on the Trade Desk issue? We were just talking with Isabel Lee about why is Trade Desk doing so badly? It's down 70% year to date. And to my mind, that's an incredibly valuable business model, right? You want to be able to aim your ads at the correct viewers.
Yeah, we just launched a programmatic ad forecast, and it is a growing space. The problem for the Trade Desk is their take rate is really high and there's new competition, so potentially some challenges there. Not to mention the open internet, like the TV marketplace, is struggling, at least compared to big search platforms and big social media platforms.
What's the AI impact on advertising, do you guys think, these days?
We think the AI impact is not much for search.
Okay.
We don't think it erodes the search business.
Well, because I could have made an argument that's the death knell of search, but it hasn't been the case.
It hasn't been the case, and half of search comes from small businesses. They're never going to move to a ChatGPT search for years. They're going to stick with Google. It's not the death knell for social. What we're worried about is the open internet, long tail of publishers, where we think this completely undermines their business, and what they should do is they should license their content as fast and as often as possible with these AI platforms and take that money and pivot to event businesses, to subscription businesses, and move away from advertising.
What about on the provider side? My buddy Mark Douglas runs a company called Mountain, right? They got together with Ryan Reynolds on the creative side, and now they have an AI program that allows small businesses to create their own advertisement and then aim it at the right people in their region.
Yes.
It seems like it should be a slam dunk.
Small business, CTV, B2B, CTV, these are a lot of spaces that didn't really exist a few years ago, and now because of some of those AI tools, the creative barrier has dropped much lower, and everybody wants targeted advertising. Everyone wants targeted on TV, and so those are definitely some growth areas. But overall, if you zoom out to the total TV landscape, it's not growing. It's not growing the pie, and that's why we're seeing consolidation, because when the pie stops growing, everyone starts battling over taking share.
You know who gets paid here? David Zaslav, the CEO of Warner Brothers Discovery.
Yeah, he looks like a genius right now.
He does. He does. I mean,
and he looks like a defender of the creative community. He's starting to look like a man of the people.
I tell you, the best trades in media over the last 15 years have been sales. I mean, Larry Mays in the radio business, Rupert Murdoch in the big diversified, media empire. Now maybe the Zaslav and John Malone, all those guys, boom, they said had enough. Now it's up for some of the new technologies. When does Google spin out YouTube? Wouldn't that be great?
The thing about YouTube,
former banker.
Yeah, I think YouTube is core to their business.
Yeah.
The thing is, though, advertisers don't think of YouTube as TV, but consumers think of YouTube as TV. Consumers even think of social video as TV more and more. So if you look at how TV broadcasters are positioning themselves, they're still going after the old story. We have brand safe, the most premium content, the live sports you want. Digital platforms have that. Thursday Night Football is on Amazon. The Oscars is going to YouTube. The landscape is shifting, and we're not seeing the kind of investments in content or investments in global solutions that we think we'll need to see for those to turn the business around.